Hello, folks. Brandon Chapman with you today. It's another Theo Night video for February 2nd, 2022. It's the 2/22/22. Wow, it's pretty crazy, isn't it? So, crazy day, though. Ukraine causing market digestion as oil stocks waver and stocks rallies, gold rallies, rather. And boy, you think about what we're in. I mean, the market was maybe up slightly today before fading back. We look at kind of the intraday trade. You kind of see the back and forth action. The news cycle on Ukraine is causing a lot of heartburn for investors trying to sort things out, right? You want to be bullish because the market's sold off. We're at support. And yet the news cycle is so uncertain in terms of, are we going to war? What's the Fed going to do? There's so much out there that's causing a bit of digestion, right? And digestion, sometimes it just doesn't go away for a while. We're trying to find areas of opportunity. Mentioning gold here, I mean, GLD or gold was up about 0.2%. Not super exciting necessarily, but it was one of the few areas that did see higher prices today. When you look at the percent change on the sector basis, utilities were minus 0.11% at support. Going back, we have 3, 4, 5 touches here at around that 66 mark. Is there an opportunity if the market settles and we catch a bid here in the coming days? Maybe utilities catches a little wind at its back, but it needs bonds, right? Again, we think about the digestion. We're trying to figure out what's going on, right? What can we count on? Even on a down day in the market when the S&P is down 1%, bonds were down as well. Yields were up. So we're not seeing that relief in the bond market countering, right? We're actually seeing some degree of correlation between stocks and bond yields, stocks and bonds. Okay, bond prices. So we're in a very interesting predicament, right? We look at forward/CL, right? Oil prices up slightly, kind of a really wide-ranging day, long-legged spinning top, tested the high at 95, faded back, went lower, did finish higher on the session. We're actually kind of flattish here so far again, on the overnight session. But as we look at crude prices, we look at the product depth here, forward/CL. I mean, right now we're still seeing a backwardation market for oil, maybe flattening out. Is the demand story starting to deteriorate? The supply story isn't. Supplies aren't getting better. And the news, again, coming out of Ukraine, President Biden today suggesting we're going to have to deal with higher gas prices. It certainly doesn't bode well from an inflation story. So again, negative for the bunch overall. Now, some of the areas that are negative today. So we'll look at, let's start off with Canadian banks. Really interesting. So TD actually finished down a little bit on the session. We rallied off the lows, but I thought it was interesting after all the news that's been going on with regards to Canadian banking. And you go to the trade tab here and we start to look at, is there any significant activity? And you look right here, 14 April 22, 75 put, 3,000 contracts. So again, somebody's out there buying some puts in one trade, right? 3,000 contracts. That's a decent amount of money, a few $100,000 trades in one print at the 75 strike. Now again, indication, could TD go to 75? Might be pretty reasonable. We got earnings coming up here early March. But again, we're starting to see a little bit of selling, higher volume today, neutral candle. You might look for a break below today's low, and this may roll it back towards the lows around 76 to around 75.50. You break that, maybe even back to 72. But again, that's 70 puts out there. RY, we're talking what? Royal Bank of Canada. We're at support. It actually rallied off of the lows of the session. It does have earnings coming up, I believe, on the 24th here, as you'll see, before the market opens. So that's on Thursday. Now, here's the deal with RY, though. Again, some bearishness coming in on the option side of things. You'll see 1,000 contracts, another 1,000 contracts there at $1.70. We go to that 14 April expiration, 2,600 total contracts trade the 105. Again, an indication of downside potential movement. That's not as far out of the money. It is an April expiration, but maybe a little bit of a bearish indication going into the earnings on Thursday morning. But again, 105 is the potential move here over the next 6 weeks or so. So again, some interesting trade that's gone on. Again, following all the news we've heard about going on in Canada, and specifically last week with Canadian banks. Now we're seeing some bearish option activity pop up. I don't think I've ever seen any activity like this on these two companies, at least not like in the last couple of years. So kind of interesting. Also, on the bullish side, GLD. And so it's tough. Gold right now is higher, but we're talking about war. We're talking about all this stuff going on. And, there is that sense that maybe the bias to gold is the upside. Now, if you actually look at implied volatility, we'll go out here to April just as an example. It's not exactly, you'll see that it is actually skewed towards the upside. So for example, look at the implied volatility here. Look at it out here. Meaning what? The out of the money calls out here are getting more expensive, right? It makes it easier to buy an upside call spread. Well, look what happened today, for example, right? This is a 31 March expiration that happened today. And we're going to roll this out. 25,000 contracts traded at the 205 strike from 31 March. We're talking 37 days out. We're looking upside here, 205 possibly. Now again, and this might just be, what if things really deteriorate and gold goes parabolic? That's in essence what that would require. Is it a certainty? Absolutely not. But for 18, 19 cents out there, if you're trying to hedge a catastrophe, maybe that's something that may be worthwhile to consider. And that's really what's been happening in gold and silver. We talked about gold and silver for the last couple of weeks, and in particular the last week or so. Silver's been up. Hecla is one we've talked about, right? Had an earnings announcement today. Was high, broke out, fell back a little bit here. Looking for this thing to break above 550. Look at the kind of retesting prior highs back here. Today, FCX. So we're seeing a little bit of a pullback today in Freeport-McMoRan. Again, you might look for a close above today's high or trading through today's high as a trigger. It's an industrial metal. Again, there are risks here, right, versus gold in this respect. But again, if prices start to go up, it could positively affect a producer like Freeport-McMoRan, very diversified. Now, as we look at Freeport, it was a May expiration. So we're out here a little bit, 87 days. And it was out here at the 47 strike, 5,000 contracts traded at the end of the day, mostly bought. And again, going back, we'll see here 47. So not super far out of the money, but indicating could we get a potential breakout here above the resistance at around 46, possibly, right? If we do that, it could be relatively positive. And again, we may see a continuation in the move we've seen since January 28th. Now, when you think about Russia, they produce about 6% of the aluminum. The sanctions, what's going to happen there? Kind of interesting for the aluminum market. Maybe a company like Cenex, for example. It's been on a tear of late. We're hitting some resistance. We have earnings coming up. Could this just be kind of a flag, a little pause? Could be, right? We might be en route to about a 223 to 261% projection off of this initial seed wave and consolidation. So again, very real possibility on a breakout. Maybe it's going to take the earnings to get there. And the earnings are coming up when? It's coming up on the 24th, so Thursday after market close. Could initiate a breakout, looking for maybe upside towards 26. Another stock here, OCGN. This is on the bullish side. The stock staged a breakout today on substantial volume, about 69 million shares. Now, a couple of bullish trades that occurred on OCGN today. 25 Feb. This is all for this week. And you'll see up here at about the $5 strike price and the $4. We see it spilling into the $4.50 as well. A lot of buy side type of activity. You'll see 44% at the ask, 5.6 times the average. We're talking $4 to $5. And guess what? Earnings are coming up this week on Friday before the market opens. So maybe an indication, today's move and the option activity, that maybe we're looking for a positive result here. Maybe seeing this stock as high as $5. Now, again, you look at the expected move, it's close to $1.87 right now. So that $5 is certainly within that expected move range. So we might be looking for a move that's beyond that $5 strike price. Uber's one I believe we've talked about before in this video. This one will kind of finish on here. Kind of at support down here. Now, we had it previously back on the 15th. Actually, it was a Tuesday. It was an upside call spread. I think it was like a 37, 40, or 42. Today, we're kind of failed. We're back down against support today. We've already had the earnings. And today, a nice upside call spread, 34, 37. So basically, at the money to out, looking for a bit of a bounce back towards prior highs. Again, you might want to see some directional confirmation, maybe trading through or closing above today's high. Let's kind of wrap things up just to see how bearish things got today. Are we kind of nearing a point of capitulation? As we look at the VIX gapped up to 32 and fell back to 28. You look at the VVIX, for example, only around 130. These are not exactly the most capitulative signs for the market. As we look at SKU, for example, SKU finished back down around 128, still moderately high, but not near the levels we've seen, which does open up for bigger potential moves in the VIX with a lower SKU, lesser hedging. Now, as we look at some of the intraday kind of activity on the advanced decline, we're going to look at DECN plus $ADVN. We're looking at a ratio of advancing declining issues. And we're going to focus on the yellow line. And again, we finished right around 3.4, but we did come off the lows of the session. So we're going to go intraday here and see how bad things got. You'll notice we did get as high on the advanced decline, or declining to advancing rather, as high as around a little over 5. So we never really hit that 9-10 threshold that would be indicative of an intraday bottom or daily bottom. We look at DVOL plus $UVOL. You notice this did get a bit higher, about 7.5 times more volume on declining issues than advancing issues. If you look at the values over here, again, did not quite reach that threshold of like a 9 or a 10 handle or higher, which would be much more indicative of a capitulation. So what we're seeing today in the S&P, whether you look at the SPX, SPY, or ES, what we're not seeing today is really a significant sign of capitulation, even though we're at support. We could see things overnight with the cycle. We could see things push back towards the lows tomorrow, and then we'll see how we do as we approach the low from back here on January 24th at 42.22. And there's that 222 again. We've come full circle with today's date at 42.22 being the low of January 24th. What a note to kind of end on, and we'll kind of wrap it up there. Thank you. Catch you back next week.